Hello, everybody, and welcome to another episode of the National Land Podcast. This is episode number 143. My name is Mac Christian, and I'm the Chief Marketing Officer here at National Land Realty, and I will be your host. Now, today, we're talking with Erik Gillam. Erik Gillam works for Aldrich Advisors. They're a West Coast CPA firm, and they do a lot of the things that your typical CPA firms do. They'll help you with your investments, they'll help you with your taxes, things like that. But Erik's division within Aldrich Advisors is very unique. Erik worked with agricultural outfits to help them with their business. Now, today, we're talking with a lot of the things that he works with. We talk with some problems, the questions that he can't answer. I tried putting him on the spot a little bit with a lot of questions, but we talk about agricultural operations and things that people can learn about bonus depreciation. We're going to talk about cash basis accounting, all kinds of problems that you can run into, problems that he sees in the field, and things that can help you out at home, whether you work with a firm like his or not. Now, this is a super informative episode. Sit back and enjoy. All right, and we are live, and we're here talking with Aldrich Investment Advisors. It goes by Investment Advisors, Aldrich Advisors.
Aldrich Advisors. Okay, we do have a financial investment arm. I'm glad you brought that up, actually. We should talk. No, I'm just joking. You keep going.
Perfect. So, Aldrich Advisors, they also have investments. But we are here specifically talking with Erik. And actually, I didn't clarify with you beforehand. So this is like I'm running risk, and I'm Gillam or Gillam?
Gillam.
Yep. That's why we asked. Yeah, I tried to do that beforehand. I didn't cover my bases there. Erik Gillam, thank you very much for being here. Aldrich is a firm of accounting, and I'm going to let Erik sort of tell it here. This is not the place that you want to go for your taxes. This is working with companies and overhead and efficiencies and, well, just business structure. Erik, tell me a little bit about what you do and how Aldrich works.
Yeah. One thing I will update you on, Max. So we do taxes as well. My specific job as it relates to companies isn't taxes. So I lead our agriculture group. So let me rewind a little bit. So Aldrich, we're a West Coast CPA firm, right? So we do a lot of things that other CPA firms do. Specifically, tax preparation. I do audits, reviewed financial statements, compilations, those kind of things. Also, I work with companies on, different process improvements, or, hey, if you're like, I think there might be somebody stealing money from us. What do I do? What are some ideas or things I can implement to help mitigate some of those risks? As far as Aldrich as a firm, West Coast CPA firm, we got offices, a couple in Oregon, one in Spokane, Washington, I think 4 offices in California, small office in Denver and Salt Lake City. So definitely West Coast. We can do stuff all over the US. Another thing that's changing, I don't know if you guys have ever heard about Zoom or anything like that, but we can actually serve people from all over the United States, right? I don't have to physically be in your backyard to get on a phone call or a Zoom call similar to this, since you're in Idaho and I'm in Oregon. I mean, we can set up these types of things wherever. I specifically do have a concentration of clients in Oregon, specifically the Willamette Valley, but I do have clients down in California, Idaho, Buckeye, Arizona is another area of where we have clients as well. So it's kind of all over the place. But yeah, as far as what kind of makes Aldrich unique, I mean, I do think a lot of CPA, at least the larger CPA firms out there, they do try and industry specialize. So you kind of got, what are our differences from the big guys? So you got the really large CPA firms, and then you got the really small CPA firms. So the way that we differentiate, and I kind of look at us as kind of a Goldilocks situation, right? We're somewhere in the middle. So the younger guy or the smaller CPA firms, that's going to be your mom and pop shop that's been around for a long time. Most likely that person's getting ready for retirement, because that's just the way that the industry is going right now. And they're great. They're great at relationships and stuff. But, there's sometimes as your business grows and gets complex that you're going to throw stuff at them that they've never seen before. Right. And so now you're essentially paying them to learn how to do something. And so we've seen enough of that stuff, and we're large enough that we have the resources that we've seen pretty much anything you can throw at us. The difference between the larger CPA firms is that that's just that they're very large, very corporate. They have national experts that have seen a lot of stuff and are really smart. but that also comes with a price tag. And how often are you actually going to see this person, right? So the people that you work with at Aldrich are going to be the people that you work with through the entirety of your experience, and we have a little bit more of a personal touch. It's like, hey, I'm working with somebody I know. I'm working with Erik. He's my buddy. Like we can talk fishing or whatever it may be, and still have that personal connection. And it's not such a big, large corporate organization. So I knew I threw a lot out there, and I apologize if that sounded like an advertisement. It wasn't meant to be. It was more just information sharing than anything.
Awesome. And how did you get into this in the first place? What kind of, accounting, it would be an interesting, some insight there. And then how did you choose to specialize in agriculture?
Yeah. Well, step one, bills to pay. Have to pay the bills, right? No. So a little bit of my background is I grew up in a very rural town in Eastern Oregon. So rural that 2,000 people, and that was at its peak. That was at its height, was 2,000 people in the town. And not only is it a small town, it's in a very rural area as well. So one stoplight in the whole county. So I don't know if anybody else out there has been in that kind of rural where you have to drive 3 hours in one direction to find a town that's got a Target or anything like that. So very small town. Grew up there, had a great childhood, but obviously you're surrounded by agriculture. My dad actually owned a distributorship. And so I kind of got into business from that perspective of like, every time I wasn't playing sports, I was working in the family business, pulling orders, delivering things, all those kind of things, and getting to deal with QuickBooks, invoicing, that kind of stuff. Accounting is kind of like a second language. So you either get it or you don't. And I randomly stumbled across an accounting class in high school and it clicked. And so it was one of those things that just came easy. And so I was very fortunate from that perspective. So I went to college, got an accounting degree, and got a job at Aldrich shortly thereafter graduating college. Started working with agricultural companies just because of my background and the people that I was working with. And worked also with a lot of construction companies as well at the beginning, but definitely felt a draw towards agriculture. And so from that, and that was in 2004. And it's hard to believe that, 20 plus years now have gone by and people actually put me in charge of things. They're like, yeah, we actually want you to run things. We want you to lead people and stuff like that. I still kind of scratch my head a little bit on that one. But now I lead our ag practice. Have a lot of really smart people. Probably have 15 people that do just agriculture work. And so, it's been a kind of a cool ride and a way to look back and be like, wow, I don't know exactly how this happened. And then just some other fun facts about me if we want to really go down the nerd rabbit hole. So I do have a specialization in accounting. There are specializations. It's weird. I have a specialization in cooperatives, which is an entity structure. And in agriculture, there's just a lot of agricultural specific cooperatives. There are some other ones out there, but primarily you think of agricultural cooperatives. And so I'm actually the acting national president of the National Society of Accountants for Cooperatives. And so that means that, like, I don't know if you guys know this or not, but I'm kind of a big deal in the co-op world.
El Presidente, I'm glad to have you on board.
It's something that I brag about a lot. It's funny because like Mother's Day was Sunday, right? And so I'm talking to my mom on the phone and she's like, oh, what were you at last week? And there was this big national conference and I had to get up and like introduce people and give away this award and all these kind of things. I was like, oh yeah, I forgot to tell you, I'm the president of this association. And my mom's like, what? And they're like, what are you talking about? And so like I had to explain to them what it was and stuff. So I'm surprised it's not on like Twitter or Facebook or anything like that, where people are just talking about this a lot, but yeah.
Well, you got to wrap that up on your business card, get like a car sign with that on there. Like you got to do the advertising for it.
Absolutely. I do have a fancy gavel that they sent me as a commemorative item. So I do have
There you go. Yeah. You should use that in the office when somebody's talking in a meeting, you just start hitting the gavel.
Boom. Right here.
Yes. There it is.
That's how official it is.
All right. So you got to use that for the rest of this podcast to shut me up.
Exactly. Anytime, Mac, anytime you go on a tangent, bam, gavel.
Exactly that. Yes. I'm known for tangents. So you gotta keep that thing ready. So as you've gone into this, and I gotta give you commendation for all of that, because that was in my MBA program. Managerial accounting absolutely wiped the floor with me. That was not the most pleasant thing for me, not my world where I've come from professionally. So like it's marketing, so it's like that one absolutely tortured me for that class. That was fun.
And one of the most ironic things is, if I look back at my college career, the one class in college that I didn't understand, like it just didn't make any sense to me, was auditing. And I'm literally been auditing for the last 20 years of my life. Like that's my job. And now it's like very logical. Like I'm a very, like my wife says I'm too logical. Like she's like, Erik, you need to stop thinking, like I'm just being a little flexible here. And I'm like, well, it's not. I mean, it would actually happen Monday, not Tuesday. Like, what are you talking about? So
anyway. It's either this or it's that. Which one is it? Yeah.
Exactly.
I am in that world. So tell me about, we kind of talked a little bit about what you do with Aldrich, but like, tell me sort of the types of businesses that you work with at Aldrich. When somebody comes to you asking for help, typically what kind of business, and do you have a filtration system on like, okay, yeah, we can't help you. So what's kind of your specifics?
Yeah, we do work with a large variety of clients, and I'm not talking about just me specifically, but our entire ag portfolio. We work with some very large companies up to like $1 billion in revenue, all the way down to some small like mom and pop family owned farms that we've been doing their taxes for a long time now. As our firm has continued to grow, I mean, we started in 73 and now it's 2025. So 50 years. So we have transitioned out of a lot of the smaller mom and pop operations, just because our fee structure anymore can't necessarily support just doing somebody's tax return and their kid's tax return. But we do still work with a lot of production agriculture, right? So they don't necessarily, depending on how much financing they need, that'll kind of dictate whether they need a compilation or a review. But a lot of times we'll work with companies that just do taxes. And then there's a lot to that, right? We can work on, business transitions and stuff like that. But we do have a wide variety of clients. I would say probably 2/3 of our portfolio is just tax work, and another third is the attest work. So the stuff that I do as well. As far as what kinds of things, one of the things, and I mentioned this a little bit already, there's been a lot of people, especially in the ag industry, where they have these long-term relationships. Maybe dad worked with this CPA, or you're the person that's getting close to retirement and you've worked with the same CPA for the last 30 years. And that guy's like, I'm ready. I need to retire. I'm going to literally die at the desk. And so we're at this stage in the US, especially ag accountants, that a lot of those people are retiring. They're looking like, so now the business owners are like, well, what am I going to do? How am I going to, get my taxes done or whatever it may be? And so, I am the oldest person on our ag team. I'm 44. And I'm the oldest person on our ag team. We did just last year, one of our long-term partners, Dave Buck, he retired and he was with the firm for 40 years. So he's like an example of one of those people that kind of has been around with these farmers for a lot of years. And so we've done a good job of, hiring talent, young talent that's interested in agriculture. We go to local ag events around here. There's different ag organizations. So we want to be a part of those and invest in the local ag community as well. As far as clients that we're looking for, again, we try and tend to stay away from, the smaller operations. And we do get a lot of reach out from people like, hey, I'm thinking about starting a farm. What do you guys, like, maybe I need an ag specialist? Probably not the case. If you're just thinking about starting a farm, maybe even start with Googling some of your questions first, or even ChatGPT is a great option. But as you get up and producing and you start moving some volume, then start to look for a more sophisticated ag CPA. Does that kind of?
Yeah, that does. That really does. And along with that, so, one, clarifying client base for your agricultural division. Second is, okay, so I have an existing farm. We're going to call it mid-tier to large. And what are the types of problems that I might have, or that maybe I don't know that I have problems yet, but the types of things that I'm looking to solve that would lead me to reach out to, let's say, your division?
Got it. Let's see here. If you're a mid to large farming operation, at least where I'm at, the number one thing that you're probably going to, and you're privately held, most likely a family-owned business. So you're going to have some sort of business transition stuff that needs to be discussed, right? That's one of the big things affecting agriculture, at least on the West Coast, because transitioning from whether it's generation 1 to generation 2, and in some cases it's generation 2 to generation 3. Now you're looking at a bunch of like kids, grandkids. How does everybody get a fair share? What is fair? You got people that don't want to stay on the farm. You've got people that do, and they're working a lot. They're doing a whole bunch of stuff on the farm. So is it fair to treat them the same as those people who just want to, cash out and collect a check? How does that all work? So that's one big, I know that's kind of a meta idea or a big issue that a lot of times people don't think, oh, I need a CPA to help me with this. But that is something that we do deal with a lot. And there's a lot of times I feel like we're almost counselors more than anything, more than, tax or accounting professionals. And so, yeah, that's one of the big issues. Another reason is good tax planning. Even though, I will qualify this, I am not a tax CPA. So all the things I'm going to talk about is because I hang out with a lot of tax nerds. Like, that is one of my main friend groups are tax nerds. So we talk a lot about taxes. Now, you do not want me specifically to do your taxes, because that could end up, somebody's going to end up in jail. Let's just be honest. I will put in whatever number you want. It's just going to be wrong. So, but I do have a lot of tax friends that we talk, and they're part of the team. Most of our team's tax people. And so, one of the really cool things about being in agriculture is that you do have a lot more levers to pull when it comes to tax planning, right? A lot of companies, they're kind of limited to, hey, fixed asset, bonus depreciation, those kind of things. And we can talk about where bonus depreciation is at right now. But a lot of companies in different industries, that's kind of what you have. Whereas in agriculture, especially production agriculture, it's a lot of times tax base or cash basis, excuse me. And so you can do things like prepay fertilizer, or insurance or whatever it may be. And so you can kind of accelerate some of those deductions if you're having a good year, or if it's a year where commodity prices are down and you're not you don't have as much money coming in. Then you can kind of let those things slacken and give yourself a little bit more rope for the next year to play with, but in the ag world. So that's why tax planning is so important in agriculture, right? Because you have a lot of flexibility. Now, to some extent, you're limited by the amount of money you have. You can't pre-buy so much that you don't have, like, you run yourself out of money, and then that would just be terrible planning. You never want the tax dog or tax tail to wag the dog. But it is, there's a lot of availability there when it comes to taxes. Third, and that would be kind of where I'm at, is in relation to, audits, reviews, compilations. Some companies or larger organizations, they do require audits in their operating agreement, their bylaws or something like that. So that's a lot of time where I come in. Other ways would be if you're getting enough financing, a lot of times your bank is going to start requiring some more proof that you have the assets you say you have, and they're lending on, other than just a normal tax return. And so that's where we can step in and help provide those services for you and get those to you, hopefully turn around in short order, depending upon how clean the information is that we get. And then we can also help clean up books and stuff like that. But yeah, it all depends on what they need.
What are you looking to find when you go in and you start working with somebody and you perform an audit of their operation, specifically with agriculture?
Let's see here. What are the kind of things I'm looking for? So first, let me kind of give a high level picture of what an audit is and what it isn't, because in talking with a lot of people, this is one of those misconceptions out there. I think a lot of people, well, first thing when I tell people I do audits, they think I'm an IRS auditor.
I was just going to say exactly that. Like, oh, you're
Yep.
the IRS guy coming to town to
Yep.
see what they owe for taxes. Okay. Yeah.
Stay away from me. Everything I say is like, I'm all making it up. There's nothing I'm doing.
Or you're going to expose all the things I'm doing wrong, which is kind of the deal, right? Like when you do an audit, you are looking for inefficiencies, but it's not necessarily punitive like the IRS. Like
exactly. We are not the IRS. We're not coming to like levy penalties upon you because you didn't pay your taxes, right? So another misconception about audits is that it's there to detect fraud. There is a part of the audit process, and like everything I'm going to talk about is under the generally accepted auditing standards. Nerd talk again. And so there are parts where you are supposed to look for fraud, and we do, but that isn't ultimately what an audit is really good at. An audit is really good at ensuring that the balance sheet, essentially your assets and liabilities, are accurate at whatever your balance sheet date is, right? So December 31st, a lot of times. And so if you're in a situation where you're like, hey, I don't really know, like I don't get great information from my accountant or controller or, whoever it may be, I just don't feel really good about the numbers, then I think an audit is a great area for you to go down, because like we actually verify with third parties, hey, this is how much cash you have. This is how much money people owe you. We actually go out and count, sample count your inventory to make sure that you actually have that. And so it does a really good job of ensuring that what that is. And so that's helpful for investors, right? So that's why banks require them a lot of times, is because they're looking at your guys's balance sheet income statement to make sure that's how much money can I actually lend this person without getting over my skis. And so they know how much kind of land collateral they have, but how much is the operations actually kicking off to allow them to give you more like line of credit or anything like that. And so that's why audits, reviews, compilations can be useful for that. Again, audits, we actually test stuff and we go in and verify a lot of stuff on there. Review is inquiry and analytics. So we ask pointed questions and look at it over a 5-year trend to make sure that, oh, this does make sense or it doesn't, some analytical stuff there. And then compilation is really, we take your information, we kind of accumulate it and make sure that it is in accordance with the rules. Now, in the process of doing that, we do have to look and make sure that there's nothing that's obviously wrong with GAAP. So those are kind of the 3 levels of assurance that you can have on those. Again, super nerdy stuff. But if the one thing you take away is audit, we actually verify stuff. The rest of them, it's we're just asking questions and making sure things look right.
So you're not just looking at the circumstantial, like this is the money that you have represented, but you're also looking at trend lines to see if there's an anomaly of like, hey, this doesn't look right. Industry wise, this doesn't shake out.
Absolutely. Yeah, 100%. I mean, that's one of the parts of the value of my position specifically, is that like I understand when things are look wonky, right? So I was just looking at a financial statement the other day of where they had a subsidiary, which is another company that's owned by the company that we're doing an audit review or compilation on. And there was an adjustment recorded that increased the income of this subsidiary by like 600,000. I was like, well, I know what industry that's in, and it's not doing well right now. Like there is no way that they made that much money. And so we went back and looked at the details, and we had some bad information in there. And so, being able to have that high level perspective and understand what's going on in the industry, that can call things out as to, okay, that's weird. Another thing would be like in detecting fraud as well. If I know, unfortunately in this climate right now, I feel like all costs are always going up. You can just name off any sort of category of costs, labor, insurance, whatever it may be. Those are all going up right now, but maybe it's fuel, right? So fuel prices start coming down, but I see your fuel expense is going up. I'll be like, well, that's weird. That's not kind of what I would expect. Let's dig into this a little farther, because a lot of times with people with fraud, they have to, they'll take money out. Well, that has to show up somewhere else. In accounting, it's like, you have debits and credits, right? So it's got to go somewhere. And so they'll try and put it through the income statement in whatever bucket they can. And so that could be like, if you have a good understanding of what's going on in the industry and the overall economic world, you can help kind of call out like, that's just unusual. Why would your fuel prices be going up in a situation where the average price of diesel has dropped by 50 cents a gallon? So that those are the kind of things that can also come up in these type of operations situations.
So you're going through their books and you're looking for, I mean, my word for it's going to be efficiencies or where money is going, what it's doing, and is that valid? Is that actually what it's supposed to be used for? And then you're helping those business owners then have correct books. And this is, you mentioned with the intent a lot of times for getting cash flow influx, getting a loan, something on that level. What are the other kind of uses that people have for an outcome when they work with you?
Yeah, that's a good question. I do think so. There is a large portion of the agricultural community out there that operate primarily on a cash basis, and I do think that that's where it can get a little challenging. Now, cash is king. We all know that, right? And if a company's ultimately going to go out of business, it's not because they lost money. It's because they don't have enough money to pay their employees or pay their suppliers or the fertilizer guy or whatever, like fill in the blank. If you don't have cash to pay those bills, that's what's ultimately going to put you out of business. But a cash basis of accounting is a terrible way of actually looking at your business. So cash and tax kind of are the same, as I mentioned before for agriculture. Your cash basis for tax purposes, which is very beneficial. But you also think about what's the purpose of your taxes. Like, I've never heard anybody come to us and say, hey, Eric, I want to see how much tax I can pay. Like 100% of the time, the motivation is I want to get this number as low as possible, right? And so you're doing all these things from a cash perspective to make your financial statements look terrible because you don't want to pay taxes. I mean, that makes 100% sense. And then you turn around and give that to your bank and say, hey, we're doing great. Don't worry about us. We didn't make any money for tax purposes this year. And the bank's like, well, why would I lend you money? Right. And so I do try and educate people in the value of having also, maybe you have a cash basis for taxes, but also having some sort of accrual basis, which is a much better representation of what actually happened during the year for the company. A great kind of industry areas that this is really impactful on would be like cattle or dairy, right? And so a lot of their value is locked up in the actual cows themselves, right? Whether it's your herd of inventory that you're going to sell as meat or your herd that you're using to produce milk. There's a big value there. And a lot of times, you're not just going out and buying every one of those cows or heifers, right? A lot of times that's like naturally produced. I don't know if you guys know about the circle of life, but those are naturally produced through normal processes, but you don't have any, it's not like you didn't buy it, right? I mean, but you do have an asset there. And so when a bank looks and says, hey, what's the value of your company? And you've got like land and then all this other stuff that you've essentially depreciated and cashed and paid for in cash. It's like, it doesn't look like I have a whole lot of value, but you're really sitting on a very large asset there. And so that's where kind of this accrual basis is really helpful of saying, okay, we do have some stuff, or we do have some receivables sitting out there that, just based upon the timing of when we get paid, there's a lot of value there. And so then they'd be like, oh, okay, well, you actually have, $2 million in assets. Yeah, I'm willing to lend on that, as opposed to if you just give them a tax return, it looks like you don't have a whole lot of value.
And to your point, that's probably not something that you want your traditional bank evaluating for you. Like finding somebody at your local bank or any kind of lending institution that understands the value of something like a cow, they're not going to do it right, I would guess, a majority of the time.
Yeah. And not to mention the fact that this is your opportunity to tell the bank how much your value is, right? If they come in and they assess a value on you, they're going to take the most conservative approach to it. They're going to be like, oh yeah, we're going to lowball this as much as possible, because the number one thing they don't want to do is lose money on this transaction. They're like, what can we do to have as much collateral as possible? And this is nothing against bankers out there. I would do this too if I was a banker. But they're going to be much more conservative on any sort of estimate that was put together in valuing these things. So this gives you an opportunity to say, no, here's what it is. Here's our rationale behind it. And I think it's reasonable. And here's kind of what the market prices are out there. And boom, here's, and like if I'm a banker as well, somebody provides that to me. I don't have to go and do all this work. I don't have to hassle my underwriter to try and come up with some made up fictional number. Like they're telling me this is exactly what it is. And here's the schedule behind it. Yeah, that's a slam dunk. Like that's going to help you. If you're looking for financing and that's an issue, 100%. If you can do the legwork on your own, provide that to them, it's going to make it way better.
I was going to say too, that would speed up the process in general. If a lot of people move at the speed of business, and if you have to wait for them to adjust their numbers and go through all of their investigations, as opposed to just bringing something in, like, here you go, check out the numbers, they work.
Yep. Here's the numbers. Check them out. Come look at my herd anytime you want, or inventory, or whatever your inventory is. Or if you're a nursery, come look at my plants. And nurseries are another one that's really interesting, because if you look at just the balance sheet of a nursery, you've got probably 5 years worth of inventory sitting on your books at any given time. And so that's a huge number, right? Like you have to have a decent amount of capital built up if you're going to be in the nursery business. And so, if you don't have any sort of schedule or, document showing that, it would be very difficult for a bank to lend on that. But hey, come out and look at it. Here's the quantities that we have, the varieties that we have, and here's the estimated cost for each. So that's really impactful.
So one thing you mentioned before, and I grabbed this as one of the questions we kind of reviewed, is depreciable assets. And that's something that in agriculture, it's a very, very significant part of agriculture due to the amount of equipment that people grab. Mm-hmm. What kind of things do you see with that? Like, do people do it wrong? Or is it something that you try to stay on top of and provide sort of a unique perspective on? Like, when you're working with that, is there some things that, because the traditional route is talk to your local CPA, and then just, there's, go buy a new truck to get this and then depreciate it, that kind of old school kind of thing. Are there some tactics that you sort of work with that are kind of at a higher level and a little more strategic?
Yeah, there's definitely. So I will say, depreciation right now are in a bit of a flux area, right? Because bonus depreciation is currently in this. I apologize to everybody. This is going to get a little bit nerdy. And again, reminder, I'm not a tax person, but I do know enough about this. So bonus depreciation is where you can depreciate at one time 100% of any new or used assets that you purchased if it has a 20-year life or less. And that has phased down. So it was at 100%, and then it dropped down to 80, 60. And that's, if nothing changes in the current tax law, that's going to phase out by 2027, I believe. Now, Trump did put forward, and this is not political, it's just, you can read this in the news. He did put forward in his, I think, big, beautiful bill, I think is what it's called, to extend some of these depreciation things back to 100% through 2029. And it would be retroactive to anything purchased on or after January 20th, 2025 of this year. And so that would allow you to take 100% depreciation. Another way to think of this 100% bonus depreciation is essentially the federal government giving you a 0% loan for 20% of whatever you're going to buy, right? And so it's helping you finance that loan, because they're saying, hey, you would have had to pay taxes and pay for this piece of equipment. Well, now you don't have to pay the taxes on it. So now, you get a 20% tax-free loan on those. Some of the areas that people, so let's assume, and I'm fingers crossed, I'm hoping that this part of the bill passes, where bonus depreciation comes back, because I do think it's really good for the economy. And anybody listening out there is probably also rooting for this as well. So let's assume that passes. One of the things that's commonly missed is agricultural buildings are technically 20-year assets, which means that they would qualify for 100% bonus depreciation. right? So a lot of times when people think buildings, it's like, oh, that's a 39-year asset. Most tax preparers would say, okay, a building is a 39-year asset. And so that means it wouldn't qualify for bonus depreciation. And you're looking at taking, let's say you spent $2 million on a building, and now you have to take this deduction over 39 years. Whereas if it qualifies as an ag building and it's a 20-year asset, you get that full $2 million deduction right now. And so you can take that and use that in the current year. So it is very beneficial, and that's something that you definitely want to pay attention to. Again, not a tax guy, but I do hang out with a lot of tax nerds. So that's my tax advice for agriculture stuff. There's other really, really esoteric stuff, like, the way that you depreciate, like if you have orchards, and like there's this thing called unicap, which I'm not going to explain, but you do have options of whether taking bonus depreciation or electing into something called unicap. And those can get a little bit complicated. So if you have stuff like that, or if you're looking at buying an orchard or adding in some sort of like long-term perennial crop like that, you do want to talk with an ag specific tax preparer, because it gets hairy in a hurry.
Yeah, I was just going to say, like, there's obvious benefit to talk, like you said, with the buildings too, like the normal assumption being 39 years, whatever, and then finding out you can do that in 20 and it qualifies for bonus depreciation. That's a big deal when you're talking upfront cash flow and how a business operates. And somebody might think they're operating in the correct manner, and there's this whole strategic channel that they haven't even looked at yet, where they could open up cash flow, right?
Yep, absolutely. I mean, it's like a way to, it's a big benefit, right? And even, I will say, the way that you can kind of amend tax returns and stuff. So even if like, you're like, oh crap, I built my building last year and we didn't do that. Did I just miss this opportunity? You can go back and amend and fix that and record it. Now, last year, the 100% has phased down, but still 60% is better than like 1/39th of a building. So still worth looking at.
This is a random question. I didn't field this one to you beforehand or anything, so it might take you off guard. But I wanted to throw one at you. We were with a partner that a lot of our agents use when they're working with ag outfits is people who are working with tax code 180. And I was just curious if you work that into a strategy with people when they buy new land.
You're gonna, again, not a tax nerd. So code 180. Like, I know
soil fertility.
Soil fertility.
Excess soil fertility.
Excess soil fertility.
It is a niche one. I had never heard of it in my life until I started working at National Land and we started working with this guy.
Got it. Yeah, no, this is one I am going to punt to our tax team. But I would assume, I mean, anything that you've got that's potentially adding value to the land or excess soil fertility, which I would assume that would be something, then yeah, you would want to work that in anytime you're trying to sell land and stuff. And you have to have somebody who knows what the hell it is.
Honestly, like when somebody comes into you and they're established, you're not working with that anyways. You would never see it. It like you were only able to take advantage, I think, within a year or 2 years of acquisition of new land, to where it's like, it's very, very specific in circumstance. Like, I was just curious if you guys rolled that in. So agriculture in general, especially when you're talking, well, almost all of it, right? You have harvest time, and the rest of the time you're not pulling income. What kind of cash flow strategies do you work with agriculture outfits to sort of incorporate that? You talked about the pre-purchase of things like fertilizer. How do those work into an overall strategy when you're working with a company?
Yeah, no, that's one of the big pieces in agriculture, and that's why you see a lot of agricultural communities are actually quite religious in the fact that, like, there's a lot of reliance on Mother Nature and a lot of praying to make sure that you're going to have a strong crop, right? Because to some extent you're betting every year. You kind of put your chips in the middle of the table and you're betting on that bet is going to come in, right? That the crop's going to come in and it's going to be strong and stuff. So I think the first thing I would say is all of the strongest ag producers that we work with, they do a good job of, in the strong years, setting some aside, right? Making sure that they built up some sort of a reserve or war chest for when the inevitable is going to happen and commodity prices are going to come down. So as far as from a cash crunch, I do think, again, this is the best of the best. They do a really good job of retaining capital and not just paying it all out to owners because they need a house remodel or anything like that. So not that there's anything wrong with that. A beautiful house is an asset. It's just a different asset than your farm operations. So step one would be building up some sort of reserve. But you're right. In agriculture, it's one of those unique places where all of your revenue generation happens essentially at one time. You may, in Oregon, we have lots of crops. I think we have like over 30 different commodities that we grow, or 300 different commodities that we grow in Oregon. It's a little different than the Midwest, where you're predominantly like corn, soybeans, and those kind of things, wheat. Whereas in Oregon, it's a lot of different things. So you may be able to stagger a little bit, but you're right. You're getting a majority of your income in one period of time. Now, there are ways to kind of spread that out. Sometimes you'll work with, whoever you're selling your commodity to. Sometimes they'll pay you in third. And so you kind of get those that way, and it can be a little more planned. Sometimes you get it all at once, and you can ask to have some of it deferred until January. I know that that can also have a tax benefit as well, not just a cash flow benefit. Because if you don't collect it until January, then that means you're not in your tax basis or cash basis. That means you're not paying tax on that till the following year. The other part would just be, if you're not going to be as much on the diligent cash flow projection and understanding your costs, if that's maybe not your strong suit, then you probably are going to look at some sort of operational line financing through a bank. Now, I do know that there are people out there who will effectively use their agronomy company as a bank. So they'll buy all this fertilizer and chemicals and stuff, and then they will just set on the AR balance for a number of months. I generally don't recommend that, because you're most likely going to pay a much higher interest rate on that type of situation than you would be getting more of a traditional loan through a normal banking institution. And I will say, as far as dollars go, everybody's heard land rich, cash poor for farmers. And so I don't know how much equity that you have in your land, but that can be a valuable asset to lend against for that, like as long as you're paying it back, as long as you're keeping track of your costs. And I've got a friend in Eastern Oregon, and he operates a ranch over there. And the person that actually owns the ranch, he's like, "Hey, Justin, I need you to break even this year." Justin's like, "Okay, no problem." And I was like, "Really? It's that simple? You just break even?" He's like, "Erik, it's not hard. I know how much money I'm going to bring in. I just don't spend that much money, right? I mean, that's all you have to do. Like, you just don't spend as much." And so I'm definitely oversimplifying, because then you have this expectation of like, okay, well, I got to do this in order to get this. It's when you get behind, that's when it snowballs, and then that's when you get into trouble. So if you can kind of pace your spending along with your revenue, either growth or shrinkage, that's where you're gonna, and you gotta kind of have to keep track of it all the time. Because if you get behind, that's when it can get bad.
So yeah, and a lot of that, you being influenced by the commodity values. I wanted to ask you another question as far as you're building out a strategy, as you're working with a client, do you incorporate things based around what we're seeing more and more, especially out west, it's water shortage. Out back east, we're seeing hurricane damage, we're seeing tornado damage to crops. Is there a strategic angle that you approach this from an accounting perspective, or don't want to throw you under the bus and say a tax perspective, but in those cases, is there something that you're working with strategically to kind of offset that risk?
We do, we do try and work as much as we can with like the Department of Agriculture. So we would want you guys or any of our clients to get as much federal funding as possible when unusual things or things out of our control happen, right? And it doesn't necessarily just happen to happen in Oregon. It could be a national thing. And so now you're qualifying for some of these national credits and stuff. But yeah, anytime wildfires has been a big thing that's happened here in Oregon. We don't have as many other natural disasters in our area, but wildfires has been one that's been impactful. And so how can we help to make sure that you guys are getting those dollars? Like the PPP and the employee retention credit, those kind of things. We want to make sure that they're on your radar. In Oregon, there was a overtime credit, like Oregon. Anyway, there's a credit in Oregon for overtime. So we want to work with our clients to make sure that they have access to all those things. As far as like positioning themselves in an ever-changing both climate and economy, that's where it can get really challenging, because most farms, that's what it is. Physically, you're there, right? Like you can't pick up your farm and move it to a more northern latitude, right? And so you're kind of where you're at. So maybe even one of the questions we get a lot is, what should I plant this year? From what type of commodity prices it is to, what's the weather going to be like? Are we transitioning to something that's a little more suited for a warmer, drier climate, as opposed to what we have been for the last, 70, 80, 100, some of the farms we work with are century farms. So they've been doing this for 100 years. So I probably dodged that question pretty well.
I was just going to ask do you supply crop advice?
No. We get that question all the time. We do not answer that question ever. So
good dodge. That's probably a position that you don't want to put yourself in liability wise. So as far as, as you're working with somebody, you sort of build out a holistic plan. Is this something where, are you typically in touch throughout the year and touching base and readjusting, or is this like you usually meet once and just kind of go through the books? What kind of relationships do you establish when you're working with agricultural companies?
Yeah. Again, this one will depend on the client. So if you're going through, when we talk about at the beginning, the business transition stuff, you're going to have to meet a lot more often than just once or twice a year, right? Because there's a lot of things that need to happen to have a successful business transaction or, transition. And so in that kind of scenario, maybe we meet 4 or 5 times a year. If you're just okay doing your normal stuff, and it's kind of routine, you're on a routine, we'd probably meet, at least a couple times a year. Definitely kind of, here's your taxes and tax return, and then also in the fall / November, December timeframe to really do some strategic planning around taxes. And as we look at what we do for our tax planning, you can kind of break it into 2 buckets, right? You got one, which is the current year activity. How are you doing now? What are these levers which we talked about can we pull to kind of put us in a good position for our tax bill today? The other part of it is going to be our long-term strategy, right? What is the long-term goal? Are you planning on leaving money in the business? Is a like a lot of companies are set up now as pass-through entities, which that maybe an S corp or a LLC or something like that, and that's traditionally been perfect. Well, some of the law changes and taxes has made it more beneficial to maybe look at going back to a C corp, right? Because C corp's locked in at a 21% interest or 21% tax rate, and it could potentially go even lower, under the new bill. And so having some of these long-term discussions about, hey, what is your entity structure? Does it make sense to change up some of these things to get us, we're looking at this long-term, like you're going to be doing this for the next 20, 30 years. What is the best outcome from a tax perspective? And so we kind of take a 2-prong approach depending on how much you guys want to get into it. Some people are like, just show me the bill at the end and I don't want to hear anything else about it. But there's other people that want to be much more hands-on and involved in that.
I like to joke that land is the world of it depends.
Yeah, there you go. Yep, for sure.
So Erik, I do want to, I'm always conscientious of the clock, like because I know I'm taking up your day. So moving up on into time, I wanted to ask you, are there any questions I haven't asked that I should have?
That's a good question. I can't think of anything other than than just some random, I can't, no, not that I can think of. I'm sure I could tell you stories for days about, like, I got a wife and 2 kids. They're hilarious. They definitely keep me on my, there's a whole different like terminology for things these days. Like literally,
Yes.
like there's words that come out of their mouth. I'm like, I have no, like,
but you said it just me. We had them too. Our parents couldn't identify with that. Like,
that's true.
We had the same thing going on, and now like we have to learn at even more rapid pace now that there's like a digital world and things spread faster. Yep. Like I got to know what skibbity is now. This is insane,
right? Who knew? Who knew? Exactly.
I did want to ask you if somebody is out there and they're asking a question, with their organization, what should someone flag as, I need to talk to a company like you?
Yes, I would say definitely talk to us if you are in an ag organization that it's truly an ag organization, right? Like, and this is the long-term plan. So if you just have like a hobby farm,
I was going to say, if you're growing vegetables in the backyard, it's probably not the time.
This is not, we're not the shop for you. But if you're looking at, dealing with real acreage and really running this thing like a business, we're probably a good advisor for you. And we're talking ways to help you. Again, we're not going to be we're not the Walmart of CPA firms, but you are going to get people who know what the hell they're talking about. What the heck they're talking about. Yeah.
And so, and operationally, you'll work nationwide, mostly in the West Coast. But as you said, Zoom is a thing, so you can work with people nationwide. I'll have your link in the show notes. But for anybody curious about sort of bases of concentration, you have a few cities that you operate out of. But again, I wouldn't call that a relevance factor. Reaching you, what's the easiest way? Is it online appointment? Is it phone call?
Probably shoot me an email would probably be the best. And then we can schedule, if you're interested, we schedule a call and we can chat. And again, I'm going to be probably as honest on this thing. I'll be honest with you and be like, hey, I think this is a good fit, or if it's not, I'll tell you that's the case. But reach out via email and we'll get something scheduled. Awesome.
Well, Erik, I really appreciate your time. This is a very cool conversation. I dig it. Thank you very much for giving us your time. And this is Erik Gillam, Aldrich CPA and Advisors.
Thanks.
This is the end of episode number 143 for the National Land Podcast with Erik Gillam of Aldrich Advisors. If you want to reach out to Aldrich Advisors, their link is in the show notes. Be sure to get a hold of them if you have questions. Now, for you sitting at home, make sure to like, subscribe, and comment on this podcast if you have a platform that allows for comments. There's a few that don't. But make sure to subscribe to the podcast at the very least so you don't miss out on the next episode. Thank you. And have a great one.